Traders, today we're talking tops and bottoms in the market. Now, to be fair, I'm not calling the top on the S&P on the daily or the weekly or the monthly, and I'm not calling the bottom in energy. Is that the only sector moving lower here? But what we can do is look at three things intraday to help you when you're trading to decide, hey, when should I get in and when should I get out? I use them every day. Keep them on a side chart. We're going to go over the rules right now. First thing, you have to look at the NYSE tick, $TICK. Any platform, you could get this 15-minute chart. In my opinion, I love it. Negative 800, bearish. Positive 800, very bullish. 0, flat. So we're looking at stocks upticking versus stocks downticking from their last price. So when we have that negative NYSE tick, that means sellers, they're driving prices in stocks lower. If you're short and we hit a negative 800 tick, cover, take your profits. If you're long and we get a positive 800 tick, it's usually a good time to start scaling out and start selling your position. Now, if you want to be aggressive and you want to pick a decent entry level to possibly buy the dip in a market or buy the dip in a stock that moves with the S&P, so let's say like an Apple or Google or Facebook that will pretty much move wherever the market goes, look for negative 800 as a potential buying opportunity. Because, or if you're just trading the S&P or the S&P options or the futures, look at this. So we have a negative 800 tick, we print down, hit it again, and now we're bouncing to negative 178. Now look here at the S&P. We'll pull up the S&P futures during the same time horizon. Okay, look at that dip. That's about a 6-point dip in the S&P futures. We actually dipped lower. And remember how we had that bounce from negative 800 to 178? Look at the futures. They bounced back already 2 handles. So again, follow the NYSE tick. If you're looking to trade the S&P, they're going to move pretty much in sync with each other. Another thing I like looking at, ADD line, another indicator that will help you call tops and bottoms that will move pretty much right there with the S&P. So S&P and the ticks took a decline. ADD line took a decline too. We're looking at the NYSE advancing issues minus declining issues. When stocks go down, that ADD line is going to move lower. So ticker symbol, $ADD. Put it on. I'm using Thinkorswim. The last is $TRIN, the Richard Arms Index or the NYSE trend. Now this will move inverse to the S&P. So when you have the trend going up, S&Ps are going lower. When you have the trend going down, S&Ps are moving higher. So this morning we had some fears and the markets gapped lower with the China, with the virus over there. It was hurting the U.S. market at the open. The trend opened up, look at that, at 2. Anything over 1.8 or higher, so 2, on the trend is very, very extreme. That trend normally cannot hold 1.8 or higher for very long. So when the trend comes down, you'll have the S&P move up. So right as the stock market opened today, what happened to the S&P? Boom, shot right up higher and the trend moved lower. Okay, so look at that. And then the other level on the NYSE trend, 0.6. If the trend prints 0.6, it can't stay that low forever. It's going to normally start moving higher. So therefore the S&P will start moving lower. So you can call, if you want to, a top in the S&P when that trend gets to about 0.6 out there. 3 things, let's recap. NYSE tick, the advanced decline line, ticker symbol ADD, and the NYSE trend, ticker symbol $TRIN. I use these each day when I'm trading. Let me know what indicators or what you like looking for judging market tops and bottoms when you're trading. Shoot me an email, Lance@thefutureofwealth. Look forward to your feedback.